Thank you, guys. So, yeah, let's see. Today we are going to talk about which conditions are bad for trading. As you already know, my name is Nenad. I am working with Admiral Markets as senior analyst. I also post on Forex Street, Spider's Den, and a lot of various websites. You can always watch for quick updates on trades on Forex Street page. Positions where you see Admiral Markets is actually what I always trade. No. So guys, the question is, yeah, this is not a question for me, but Gus is already answered my question. No success is ever guaranteed. Yeah, that's true, guys, because whatever you do, there is no guarantee. Who would guarantee that if you go outside of your building, something wouldn't happen to you? So there is no. You just need to lower your risk. That's always a success. Okay, lowering your risk and a lot of different things which you do to manage your trade successfully will bring you to ultimate success. It all boils down to risk management. That's my opinion, and we will sure talk more about it, and we will have a lot more webinars to come. So pay attention. So my name is Nenad. I already presented myself. So for all of you who still don't know, that was a quick introduction and a quick disclaimer stating that online educational materials are available by Admiral Markets as Estonia for a global audience, and you should take into consideration information this session may not be suitable for everyone. So if you want to get a corresponding information on charting conditions and any other detail, please visit www.admiralmarketsglobal.com, then select your country of residence and contact an appropriate entity. Also, there is a risk disclosure statement stating all possible risks associated with Forex market. By accepting the risk, you're also proceeding further with me. And final part of this disclaimer saying that Forex is risky business, so this is a personal opinion only, and this analysis represents the personal opinion of the author, it's me, and in no way it represents the actual suggestion for the trade. So these are not MBK's opinions, and the website in the video is not a .co.uk website, but a globalnews.com website. This webinar is for informational and educational purposes only. Okay, so with having said that, we are ready to proceed. Of course, guys, don't need to mention it, but still, if you want to get a full empowerment of your trading, you should download Admiral Market Supreme Edition by logging into your trader's room. And know that by trading with Admiral Markets, you're trading with officially best MT4 broker. So today's agenda: market conditions, economical conditions, and different various conditions. So these are conditions which you should definitely avoid. And remember though, guys, that sometimes not having a position is equal to having a profitable position. Because in a Forex market, it differs from other jobs. For example, if you're working daily on your day job, probably your boss would be much more happier with you if you work maybe overtime or you work literally with no break. So usually on other businesses, working more is equal to be more in profit, right? In Forex, is not like that. It's completely different. Less is better, and that is always the case. So if you're day trading, try not to overtrade. If you're swing trading, then you stick to your swing trading. So you definitely need to decide whether you will be a scalper, an intraday trader, or swing trader. Because if you're a scalper, then you probably would take a sort of high frequency trading, which is really not that profitable in the long term, especially if you're scalping every single day and every single session. I really don't recommend it. At least I have never been successful with high frequency trading. I mean, I had some success, of course, but it was not in the long run. So my compromise is definitely to trade intraday with occasional swing trades, but more or less I trade intraday. When I say intraday, that means one trade per session, let's say London session, and if the trade is not stopped as a profit stop or break-even trade, I might carry over that trade to New York session. Occasionally, I might also open another position, let's say during the same day, but I really try not to put more than 5 simultaneous trades. Because if I do otherwise, I would be scalping, and the only legitimate reason for me to scalp is that I want to try to grow the account faster. So I'm not saying that we always are able to succeed, but that is what we can try to do. Now, I know that some traders really prefer to take a lot of those high frequency trades, and usually I get some emails where they are telling me that basically look at my success, watch, I have made some good profits in the last 6 or days or 3 weeks. I always say, guys, it's not about 3 days, 6 weeks. You should at least be profitable for 6 months and try to be overall profitable. Not that you are 1 month profitable and second month is everything is gone. So it's always that you should always pick the markets where you should trade and do not over trade. So you should not trade every single day. Now, these are some of market conditions, guys, and most important market conditions which you should avoid. Okay? So as I said, we will go with market conditions, economical conditions, and other various conditions. Market conditions are centipede wicks, sawtooth, shark tooth, long candles, but only if you are not using high volatility trading knowledge. If you don't know what high volatility trading is, I have made a webinar sorry, in the past, and it was a practical naked trading webinar where I already explained how we can use high volatility setups for trading. Now, long candles are dangerous if you are not sure what you should do. So definitely I recommend my practical trading webinar with Forex Street to learn actually how to trade long candles. So that is my personally developed method, and I think it's in a premium section, on Forex Street. So try to trade it, because I'm definitely sure it might help you. At least it helps me to trade those big Marubozu candles. Railway also, I made a system with railway patterns, but if you want to trade railway without knowing the actual system, it's also hard. So I always advise try to stay away if you're not familiar with it. V-shaped reversals, also very dangerous, because V-shaped reversals can often lead to a complete reversal, not just a retracement. And of course, DNA spirals. Okay, DNA spirals. Now, this might sound confusing to you, but I will definitely explain all of these conditions. So the first condition is a centipede wick. So when you see these kind of wicks in Forex market, you see up, down, with small bodies and very big candles, very big wicks, shadows, you know that market is undecided. Okay? And probably you will spot wicks on both top and bottom. So both top and bottom are showing wicks, and that can be dangerous to your account because it will produce a lot of fake signals. The market rallies and drops off very quickly. And usually you will see repeating action. Up, down, up, down, up, down. Now the question from Steve, on what time frame? It doesn't matter, Steve, which time frame it shows on. Because usually if you trade on 1 hour time frame and you see this, then stay away. Even if you try to trade it on 5 minutes, stay away. So basically, whichever the time frame you're trading, it doesn't matter. The conditions are always the same. Do not forget, Steve, and all others who are listening to me now, is that trend can exist on each time frame. What is a trend? Trend is a simple series of highs and lows or lows and highs. Okay, trend is zigzag, so it's thrust, pull back, thrust, pull back, thrust, pull back. In those thrust, pull back or zigzag pattern, in uptrend we will spot high and low, higher high, higher low. Same with downtrend, right? Thrust, pull back, thrust, pull back, thrust, pull back. So a downtrend is a series of lows and lower highs. So lower high, lower low, lower high, lower low. It's also a zigzag. But that is not the same as Centipede wicks. Remember, guys, trend is your friend. Why? Because trend is made by smart money. Big banks, big institutions, companies, they're deciding about the trend. All market movers are deciding about a trend. You should always join big fish and big sharks because that is the way to success. Trading counter trend can be sometimes productive, but usually it's not productive at all because you're trading against big money. I have received a lot of emails asking for euro-dollar advice. Now, guys, if you're following me and my analysis on both Forex Street and Admiral Markets, you could have seen that I have been really advising shorts from 1.1050 or 1150 levels. And you can also see that shorts are still valid. And I received a lot of emails asking, where should I buy euro-dollar? Well, guys, I really don't know where you should buy euro-dollar because I'm not buying it. I'm waiting for retracement to sell into. Don't forget it. I'm still going with my analysis. Okay, I'm still going with my analysis, and definitely I will be following short on rallies. Okay, short on rallies. The question, what about oil? Mark, please refer to Forex Street conversation with experts, and you will see my opinion about the oil, because it's not that simple. Okay, try to follow it. I will post you a link now. Okay, I will give you a link so you can read it. Okay, this is it. So Centipede wicks are dangerous to trade. Always try to avoid it. When you see this price action, that means the price is undecided. There is still not big money in the books, so you don't want to trade randomly. This can lead to a lot of fake signals, and this can lead to a lot of bad trades. Never trade Centipede wicks. See, like a centipede, it has a lot of legs from both sides, so do not trade it. Sawtooth, it's, well, guys, also sawtooth, it is tradable, but my advice is also to stay away. I will also use live chart examples after we finish with slides. I have made some collections of live trading examples, so you will see it. Sawtooth is also a dangerous movement. Because price is moving, but not in a tight range. It goes like there is no characteristic high and low. You see, this looks like a trend, but don't forget, trend is zigzag. Okay, this is the trend. This is the trend pattern. This is somehow there is no clear high and low, and when you see this, you might think that the price will stop and that it will range when it reaches its utmost point. It looks like a sawtooth, but as you can see, the whole strip of price action is sawtoothing. There are no discernible highs or lows we can trade. So really, this is something which you should avoid. And even though if you're in a trade, but you still observe this way of price action, that is the sign for you to at least try to protect your profit. Okay, protecting your profit in hard market conditions is of utmost importance, because it will eventually make a difference between a good or bad trading decision. So sawtooth is a pattern which is characteristic, because it's looking like the market is moving, but there is no characteristic high and low. Shark tooth, also known as whipsaw. Now guys, you have probably experienced this, and the most dangerous whipsaw action is when price is whipsawing on higher time frames. This is not as dangerous if you see on 1 minute time frame, but this can be dangerous on 15 minutes, let alone 1 and 4 hour time frames. Because sometimes if you see that the market, and when I say market, guys, it's different pairs, euro dollar, Australian dollar, all different forex pairs. That is when we say market. So if you see that the market is making very quick and sharp highs and lows, stay away from it. Do not trade it. It's very dangerous if you see whipsaw on 15 minutes and above, 1 hour or 4 hours. It would be, it's definitely very, very dangerous. It's not like a megaphone in a literal sense, because sometimes you might see price action like this. You see, this is not a megaphone. What is a megaphone? Megaphone is broadening top. Yeah, widening triangle. This is megaphone pattern. And yes, this also is dangerous. So I'm always saying, do not trade megaphone, widening triangle, whatever. It's not a literal whipsaw, but it's still a whipsaw, because you might see a whipsaw as a sideways price action, right? So if you see this, whether it's a sideways chop or sideways whipsaw or a widening triangle whipsaw, do not trade it, because it can be disastrous to your account. My biggest failures in forex trading are when I tried to trade megaphones or during whipsaw price action. It's not that I wasn't correct about eventual movement, because very often I see, for example, that the price will go up, and then I'm definitely trapped within a trade, and the price is going up, down, and suddenly after taking out my stop loss, it goes up. So my biggest failures, of course, not mentioning revenge trades, which we all did back in our trading days, especially when we were young traders, revenge trades. I'm not counting that. I'm only talking about rational trading decisions. That is basically a whipsaw. So when I see a whipsaw, but I'm already in a trade, there is definitely a time that when I will protect my trade. How it's done? You can. We will have a webinar about protecting your trades, because usually if you are in a profit and you see that the price is starting to move whipsaw, I always do a profit stop or break-even stop, guys. Always, literally always. I just am happy with, I don't know, 10, 15, or maybe 5 pips. Much better than losing it all because market started to whipsaw. Try to read the charts. Of course, if you're trading on higher time frames, there is less chance that you will notice a sharp tooth or whipsaw. Because as I say, it's not that common on 1 hour or 4 hour time frames. But if you see that 1 hour or 4 hour time frame is showing a sharp tooth or a whipsaw, guys, protect your profits. Try to be calm. Try to remember my words. You will definitely see a bigger success in Forex market. I've been receiving a lot of emails, really, and I also keep it for the record, that people are really grateful to me, because this is not learned from books. This is what I have experienced myself. And I'm really talking from my personal experience. What you should do and how you should position yourself when there are bad things happening. So this is a very bad thing for Forex traders. For Forex traders, indeed, and Forex market. Whipsaw is something which can lead you also to revenge trade. Because if you lose a position, you might think, okay, market will reverse now. And what happens usually after that, market does not reverse, it just goes and whipsaw up, down, up, down, up, down. Have you noticed, it's not a literal whipsaw, but you can easily see that the price is on lower time frames, the price on euro dollar is going up, up, down, up, down. It's not a dangerous whipsaw, nor I can say it's undecided. But the thing is, guys, I already, for example, I traded euro dollar today. I have made a short order around 0.675 because it's a retest of my previous analysis, where I mentioned that 0.670 is a good level to watch. But because I have seen that market goes to 0.660, 0.650, then spikes to 0.670 again. Up, down, up, down. So what I did is I put my profit stop of 10 pips, and I got 10 pips. It doesn't matter. I'm still okay with that. Because I day trade, right? So I'm still waiting for either a bigger retracement or another momentum push and see whether the price will break 0.630. If you're not sure what I refer to, please go on Forex Street and read my new euro dollar analysis. You can also find it on Albion Markets, but it's the same. Albion Markets and Forex Street, so the analysis is the same, whichever is more convenient to you. But guys, try to listen to me, because this is what I'm saying from my personal experience. Also, long candles. If you don't know what long candles are, how you should trade it, refer to my practical naked trading premium section, how to trade high momentum. I think it's there. Maybe you might correct me if it's not there, but I'm sure that I made a video and webinar about high momentum trading with Forex Street, so be sure to check it. Huge candles show breakout of important levels. Now, if there is no retrace to least 61.8 fib, do not trade it, because you want to see a retrace to 61.8, 78.6, 88 cosmic Fibonacci number, okay? 61.8, 78, 88.6. If you don't see it there, stay away. Longing or shorting is not suggested immediately after, because some traders would falsely believe, as in this example, that, okay, the price has made a breakout of a trend line, and classical school of Forex trading is teaching us, okay, when you see a break of a trend line, this can be also a sort of wedge, right? When you see a break and the candle is confirmed, go long. Well, in this example, look what happened if you went long after a trend line break. You would probably lose a trade. This is 4-hour time frame. Stop loss is big. Look at this here. So guys, it's not, you should always pay attention to long candles. This is not about trend line trading, breakout trading, wedge, or whatever. This is about long candles. This candle is not big in pips on 1 minute time frame. It's not that important on 15-minute time frame. But on 1 hour time frame and 4 hour time especially, this is very important because price should retrace because buyers already jumped in here. This is smart money, guys. This is big money. But you as a retail trader, you are always falling in a trap of buying too high. So wait for the price to settle down, to lose momentum. It's called retracement. Remember, guys, retracement is nothing more than a simple loss of momentum during a trend. Because without a retracement, there is no reversal. Don't forget it. Without a retracement, there won't be a reversal. So it's always trend, retracement, reversal. If the price proceeded down below this low here, it would have been a reversal. Now, because price has bounced from this spot, this was a retracement in probable uptrend because the trend line has been broken. Do not take long candle entries. Railway or railroad is two candlesticks with almost the same length. Third, fourth of length is also acceptable. This is the example of a railroad tracks or railway pattern. And when you see this, I'm not sure that I have done already a webinar with Forex Street about how to trade railway, but we might do a separate webinar on that. But just for your reference, guys, if you see this, again, wait for a retracement. Okay, wait to see where the price will go. See here? And this was retracement. After the retracement, you might opt to trade for a breakout of retracement high or low in this example. It's much safer for you. Because if you don't do it, you might get stopped out very soon. V-shaped reversal, often of the strong support. Shorts are not valid for those trades because you see it's a V-shaped reversal. Even it can be even steeper, and traders often think that they should go long, but sometimes the price might turn. Do not take trades on V-shaped reversal. The only exception, guys, is confluence. If you see my analysis where I mention V-shaped reversal, it's always a part of the confluence. I never ever trade V-shaped reversal without a confluence confirmation. Your way to success in cherry picking entries is always a confluence. That is how I teach. That is how I teach on price action trading school webinars with Admiral Markets, and that is how I teach elite currency traders who apply for my courses. It's always the confluence. It doesn't matter if you pay or it's free course. It's always the same because I don't know to trade and to analyze things without a confluence. And there are always good results behind me because confluence is something which will differ your entries from simple mechanical entries like robots, okay, trade on stochastic cross or I don't know, crossover of EMA. I don't do it. Confluence of various technical tools, including chart patterns, is, you probably have seen the analysis, that is how you should trade, and always in the zone. In the zone. Zone is most important. A zone of confluence, POC, point of confluence. So V-shaped reversal, always within a confluence, not alone. If you are trading stochastic crossover, whatever system you trade, pay attention to price action. Price action will always win, because this is what other traders see. They don't necessarily see a 5 turning cross or stochastic 820 CCI, whatever. This is everything. Price action is everything. Okay, so only as a part of a confluence. DNA spiral. Okay, for all of you moving average traders, this is chop. This is always what you should avoid. It's called EMA DNA spiral. Okay, because you can see how the price is spiraling within the EMAs, or it doesn't matter which MA is that. Simple, Wilders, Zurichs, exponential, light-weighted, low-weighted moving, low-weighted MA, or weighted MA, or whatever MA is that. If you see this, even on T3 MAs, this could be seen. So do not trade it. Those are crossovers which will kill your account if you take the signals from it. So I know that a lot of systems out there, they are working perfectly in trending conditions, yet they fail to work in ranging market. Have you noticed that, guys? A lot of system is just failing to make any good result when market is ranging. And this is DNA spiral. If you follow signals from this, you would go long, you would go short, long, short, and you will always lose the trade because market is not going anywhere. This is a simple DNA spiral which can fool you to take a trade and then lose a trade. So these are market conditions. Now, key economical releases to avoid are definitely interest rate decisions. What is an interest rate, guys? I'm not sure that you are all economically, that you have some knowledge of economy. I will tell you quickly that, in short, an interest rate is paid by, it's a rate at which, let's say, interest is paid by debtors for the use of money that they borrow from creditors. So the interest rate is percentage of principal paid and number of periods during the total term, let's say, of the credit. So interest rates are always, do not forget it, set by central banks. They are one of main tools of monetary policy. And central rates or interest rates have a lot of in common with investments, inflation, and unemployment. Okay? So do not forget that central rates is major news releases. And you should not forget it. For example, European Central Bank usually sets the key interest rates between main refinancing operation, deposit facility, and marginal lending facility. Main refinancing operations usually provide the bulk of liquidity to the banking system. Deposit facility, the rate on deposit facility banks use for overnight deposits, and the rate on marginal lending facility usually offer overnight credits to banks. So those are economical terms. You should not be, I don't know, very stressed about it. But overall, interest rate decisions, trading should be avoided, guys. Should be definitely avoided. FOMC, ECB meetings, stress tests, press conference after bid rate announcements. NFP, guys, NFP, do not trade NFP. When I say bid rate announcements, I think about minimum bid rate announcements, which is set by ECB, let's say, or Fed. So guys, do not trade because the price will go up, down, definitely in a whipsaw pattern, but that whipsaw can be also spotted on higher time frames, especially during the announcement and press conferences. So do not trade then, because you will probably lose. Don't do it. Now, some people asked, what is a stress test? Now, yeah, Boyk is saying NFP not for profs. Indeed, you can only spike trade, as I showed you, Boyki, on my in my webinars, how to trade NFP on spikes. Only 1 minute trades, spike trades are allowed, not anything else. Now, what is a stress test, guys? I can say that it's just a test for the banks. Let's say that, are they successful in stress trading environments? So they are usually focused on few risks, such as credit risk, market risk, and liquidity risk. So in short, it assesses a bank financial health in crisis situations. If you see that there is stress test, probably there is some crisis situation going on, and you should try to avoid trading during stress test. Okay, so these are key economical releases you should avoid. Now, trading right after the news can be bad for you, because usually after the news, the price will, let's say that the price is in uptrend, and there is a sudden spike in a different direction because there is some bad news for the currency. Usually that move can lead you to buy on a dip, which is good. But trading right after the news, for example, you see that the price is going down and you want to short it here, do not trade it, because ultimately the price will refer to uptrend. It's usually with pound dollar, with sometimes even with euro dollar, with dollar yen. Dollar yen, bad news for dollar are just used to buy a dip in dollar yen. So basically, the main trend will follow after a short spike. Do not forget it. Pre-positioning before the news, of course, if you're day trading, sometimes this is necessary. But let's say pre-positioning 1 or 2 hours before the news. And if you're still in the trade, that's the risk you should take. Risking more than 1.5% of your capital per trade, not advisable, guys. My advice for you is 0.3 to 1% of capital per trade, not risking more than 2% per day. As long as you cross 5% of threshold for a risk, you are in danger zone, and overall, in the long run, I don't think you will be profitable. Averaging down, of course, averaging down is sometimes, which can be good, but not as a martingale, only as adding into retracements. Averaging down means adding to a losing position. Okay, now I know that some traders, for example, if they started to trade with 0.10, the price moves against them, they add 0.20, the price still moves against them, 0.30, and so on. This is martingale. This is not what you should do. You can do this by adding a preemptive risk. So if you decided that your risk is a total of 0.3, because your stop loss is, let's say, 50 pips, and your overall risk is 0.0%, then you can do it. Listen to me carefully now, because this will make you a better trader. Before you make entry, always decide about the risk. Having a fixed risk is always way to success. Let's say that you want to risk 1% and you have 50 pips stop loss. It doesn't matter. Stop loss doesn't matter. You should always have a stop loss. But for example, if you have a stop loss of 50 pips and your account tells you that you can go with 0.3 on a single trade with only 1% of a risk, it's good. If you use stop loss of 100 pips, then it's 0.15, okay? You always need to calculate risk before making a trade, and overall volume traded, and I say volume for lot size, before you make entries, not immediately when you make entry. And now what you should do, assuming that you have 0.3 total maximum lots allowed, and you want to average down, then you should do it like this. I always explain it on my Admiral Markets Forex session recap webinars. Let's say that this is your zone for entries. The price has made here, you can open 0.10. If the price gets in the zone, another 0.10, and another drop within the zone, or a bit lower, a little bit lower, another 0.10. So you're trading with the same risk, but your stop loss is same, 50 pips fixed. You didn't move your stop loss. It's there where you initially put it. Now, this kind of averaging down or so-called adding to retracement will grow your profit exponentially and will definitely make your bad trades exponentially lesser, because profit goes exponentially up when you do a proper scaling in, and losses go exponentially down with a proper averaging down. So do not forget it, okay? And Friday profit taking after hours, do not do it, because usually trend trades during Friday profit taking are dangerous, because Friday is when big players want to take their profits and do not want to carry over the risk cross weekend. So you should always pay attention to after hours. Probably you can witness that a lot of times price is going up, let's say, and then on Friday it just drops down. Other various conditions, emotional trading, do not do it, never, guys. It will lead to revenge trading. This is also one of the reasons new traders lose money. Even some experienced traders, and I personally know some traders which are very good in trading, but they are losing because of emotional trading. It also happened to me from time to time, but I have learned to control myself. Do not revenge your trades. Don't do it. Don't do it. Trading counter trend with no experience, a big no also, because it's dangerous, just dangerous. Asian positioning also can be dangerous, because on Frankie Fake or Frankfurt Open, those trades can reverse and hit your stop loss. Usually profit is taken during Asian session. Midnight rollover also, guys. Now, what is a midnight rollover? It's just an overnight policy. Overnight swap prices are commonly based on the central bank reference rates shown in your broker's tables. Overnight swap rate change with changes in interest rates differentials. So if you're not sure what does it mean, and especially if you have big positions open, do not carry over the trade. Okay? So it's just exposure, added exposure to new trading day. 1 p.m. GMT, 11 p.m. GMT, assuming that you are close to London lunch. Okay? So around London lunch, which starts at 12 London time noon, try to not open a position, because you should always aim to open a position during first 3 hours of each session. Not in London noon or when market is closing. Never. And bank holidays. Don't trade during bank holidays. Why? Because there are no support and resistance levels to defend. There are no banks to defend support and resistance levels. So my advice, don't trade during bank holidays. And finally, guys, we can go with live chart now. Okay, I will just prepare the monitor. And we can go with live chart. Okay, so live chart will show you some of these things. Okay, here. Okay, guys. I use always correlation matrix, which really helps me to have an immediate correlation information about all pairs which I'm interested at currently. So always good to have. Of course, this is Admiral Market Supreme Edition, so you can download it. And also, this is the example of V-shaped reversal. See the V-shaped reversal here. It's pound dollar 4-hour time frame. See? And actually, if you were trading my session recap setup, this trade was good for a lot of pips. But well, this is actually V-shaped reversal. And you see the price is going up, but do not wait. Do not wait for the price to settle down. If you want to trade V-shaped reversal, the only possible thing I can say is try to find a confluence there. And if there is a confluence at this price, enter short, for example, here. That is why I advise shorts around 52.50. See, there is a bit confluence here, even though I don't have all the tools at this chart, but you can see it here. Previous buyers, now moment sellers here, historical sellers here, and this is historical versus now moment concept. Okay, now the second example is long candles. Before I do an example with a long candle, Gino is saying, I also didn't understand why don't trade 8 to 11 p.m. GMT. I specifically said trade it, but do not trade around London Open. So it depends if you are in which zone you are. For example, if your zone is GMT plus, I maybe should have reformulated. If your zone is GMT plus 4, that means that at 8 GMT, let's say, your 12 GMT, it's already a London noon. Yes, Greece is okay, guys. Greece is okay. London Open is 8 a.m. Yes, London Open is 8 a.m. But if you're GMT plus 4, right, it means that you will be trading around London noon, right? So do not trade around London noon. That is what I was trying to say. Do not trade around London noon. London noon is 12, now it's 12 GMT, I think, plus 1, or it's 12 GMT, I should check GMT. So if London is GMT, do not trade at 12 GMT. Yes, Gino, 12 GMT to 14 GMT. Why not? Because, Boyki, I already explained, there will be a profit taking, and usually you will see that the price is not moving. The only exception is if you are already in a trade. And when I say do not trade, I mean do not take any positions there. You don't want to be trapped. Okay, guys? You don't want to be trapped in a trade. And yes, Apostolos and Gino and Boyki, you can trade London Open, of course. But if you see a London noon in your own time zone, do not open new positions. New positions will trap you in a trade. And usually if you have witnessed, there are a lot of news kicking in when Wall Street opens and 1.5 hours later. Usually after 12:30, there is a ton of news which can really be nasty for your existing trading positions. That is why I'm saying try not to open position during London noon. Okay? Yes, big guys are at lunch, and also, guys, there is news coming in, US news. Gino, US news, check your calendar. Check your calendar. There is always big United States of America dollar news coming in 30 minutes after 12 GMT. My time zone is 12:30. Check your calendar, okay? Because sometimes those trades can either spike your profit up or it can bring you in a loss. It usually goes like it. This is how you trade. In short, how you should watch for long candles. This is long Marubozu candle. See it here. And you just place a Fibonacci from the top to the bottom of the candle and wait for retracement. Please refer to Practical Naked Trading webinar. 61.8, 78.6, and 88.6 are level to go short. This is also example of nasty centipede here. Look at this. Watch and observe price action here. Up, down, up, down, up, down. And even though these wicks are not that big, guys, it's on 1 hour time frame, so it can be very, very dangerous indeed. Really, this can be dangerous. Look at this. This is centipede here. Look. Centipede pattern. So stay away from it, guys. Now this is a sawtooth. Price is going up and then suddenly stops. Sideways movement. Up, up, up. You might think this is good trend, but the price is just stopping and doing nothing. And finally, spiral. I don't, Gino is saying, can centipede be traded as a range? No, because this is not a clear range. I never trade this because I'm a trend follower. I always follow the trend. Why would I trade range when I have trend? Because, guys, I always advise you, if you want to listen to me, it's not about euro dollar and pound dollar trading. Those are only two currency pairs. And watch, there are really a lot of different currency pairs you can take a trade from. Why won't you try with euro yen, dollar CAD, Australian dollar? Because if you see a range, you always have another market to trade. You always have another forex pair to trade. It's much safer. I never trade centipede. Up, down, up, down, up, down. You see, there is no clear trend. I just cannot, I'm not sure where the price will go. Even sometimes like this is just a consolidation. We don't know where the price is going up or down. No clear trend before it. It's just up, down, up, down. This is much better now. Okay? And finally, EMA spiral, look at this. 513 crossover. You probably have heard that 513 crossovers are one of the best. But well, guys, yes, in trending conditions. When there are ranging conditions, you will get a tons of false signals. And this is DNA spiral. Do not trade it, guys. Trade with a confluence. Okay, this is everything I wanted to show to you. I hope that this will help you, because this should help you definitely. This webinar is being recorded. It will be uploaded on Forex Street website. Of course, follow me on other markets and Forex Street. Pay attention, and of course, you can also ask some questions on my Spiders Den on Forex Factory. So, guys, take a good care, and I will talk to you soon. Now, a quick answer to the question, Apostolos, what exactly is confluence? A confluence is just that, a confluence of most important chart and technical patterns. It's the zone where we take entries. It's POC. Refer to my analysis. Thank you guys for listening. I wish you a great evening, a great day ahead, and I will talk to you soon. Cheers. And as always, trade safe.